Hey guys, Akil here. Hope you're having a great week, interesting week here in the US as we started the week, then had a holiday the second day of the week. Now we're back at it and it feels like we should still be on vacation, but we are back and we have a busy end of the week in the markets as far as news, including a pretty major news event coming out today at 2 p.m. today. We have our FOMC meeting minutes. These are going to be minutes from the June meeting, where you remember that we kept interest rates the same. And why this is important is because the market is always looking forward to what's going to happen next, right? We knew that we were going to hold in June, but we're expected to continue our rate hiking cycle in July. And not everyone always agrees in the FOMC. So the market wants to look at these minutes, interpret the conversations that happen, and use that to speculate what's going to happen in July. Now, we got a whole bunch of other news events coming out as well, but let's focus on that for today. Now, what we've been seeing in the market lately is consolidation. And even when it comes to high impact news events, we've been seeing short term action, but really long-term nothingness. And what I mean by that is that the market will move and go crazy for half an hour, maybe even an hour. And then you come back after a lunch break and realize that price simply retraced back to the same price it was trading at pre-news. And if we were to get something like that today, it would actually give us a pretty decent opportunity. And we're going to look here on the DXY, the dollar index. We've got patterns all over the place here. I'll focus kind of on the bigger one, or on the medium-sized one. There's a smaller one kind of right inside this one. Give me a second here. Right inside this little mix here that completed already. There's a bigger one on the daily that I don't think we have to worry about for a while. We're going to look at this like Goldilocks and find the part that's just right in the middle. And what it's going to be is it's going to be a potential bearish Gartley pattern. Now, this is going to be my starting point, my X leg. We're going to call this an anchor leg. So this swing high to swing low is going to be my X to A. I'll draw on all the fancy stuff later. This is going to be my A leg, right down here. This move back up, this first retracement is going to be my B leg right here. This move all the way down here is going to be my C leg. Now, I don't take micro pips or pipettes into account, so I have this as being equal to the A leg, but a very important rule is that if the C leg is beyond the A leg, then that invalidates the pattern. So make sure you check with your data provider and trade what you see, as Larry Pesavento would tell you, to make sure that this is indeed a valid leg for you. If it is, then what we're looking for is we're going to look for a decompletion right at the 127 Fibonacci extension taken from A to B. And that's going to be right up here at 103.41. Again, that's going to give us a advanced pattern formation that looks like this. Swing high, swing low, X to A. First retracement, A to B. Boom, down here is going to be our B to C. Apologies about that. Just purchased some Premier League tickets and telling all my friends so that they're asking how much they owe me and whatnot. But anyway, our decompletion is going to be right up here. And then, of course, our zone for decompletion is going to be starting at the 127 and ending at the X leg. And again, what we've seen recently with news is kind of this sporadic action. So something that may occur here is we may get we may go straight down and nothing couldn't play out, right? But we may go straight up and then we may retrace and then we may come do this and come that and blah, 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 blah. Remember that with advanced pattern formations, we're only looking for very small margins for our profits. So we're not looking for massive turnarounds. We're looking for a move essentially from this decompletion right back into that level of structure. So we can definitely get that even if we see some funky stuff with the high impact news event. So something to put on your radar. Again, we may revisit this bigger one a little bit later, but I'll draw it out loosely. Another advanced pattern here, X to A, A to B, B to C, C to D, oops, sorry about that, C to D right here, then even another potential one if we go backwards like this. Again, whenever the market is consolidating, you get these potentials all over the place. I don't pay attention to them until they're at a very specific point, just because I've been trading these for so long and I don't want to kind of waste energy. But if you are a newer trader, there's nothing wrong with just keeping your notes on here and saying, hey, we have an X to A, we got an A to B, we got a B to C. Now I'm waiting for this to happen. That way you don't forget about it. That way the opportunity doesn't get away for you. So hourly chart, dollar index, potential bearish Gartley pattern 103.41. As always, leave any questions or comments or share your ideas below. Make sure you hit that like button and make sure you subscribe or whatever you have to do to follow me so that you don't miss my next trading idea. All right, see ya. Be safe out there.